Hello and welcome. It is the 11th of February 2019. My name is Derek. All bets, trades of the like within each his own risk and their own reward. Let's take a quick look at some of the markets and start off within Theta on this video, which from this breakout on February the 9th or 2 days ago. So this is a single hour short term analysis to start. It had one, two, three corrections successful within the 18, and this one in here, not so much so. However, markets go up, markets go down. So obvious. But in seeing such within the rally here, it didn't make a new high. It was a matching high to this one, and it was a lower one to this one. Then after hitting the 18 lows, notice when it did this, three great green candles up. It hits the 18 lows here. It's one single amazing one up. Hits the 18 lows in here. It rallies up to about the closes and then falls back down. 18 goes sideways and then several moves or periods going lower. That's enough to make the 18 start to decline. So within this pattern topping formula is what I see in here right now. And this level of resistance coming in just recently has, in the last hour, seen a move within this lower high, newly declining, trying to flatten out. But quite frankly, if you come to the 18 highs and leave it quickly like this, that's not the 18 is going to still decline most likely, meaning it looks as if it's going to at least come down to 21. So I sold about 9.7% of what I own just because of this current pattern that I am seeing. Whether it works or not, well, it just means I short sale, as I call it, meaning selling some of what I own at a lower price than I could have very easily gotten. And I'll be looking to buy half of it back at 21 and half of it much deeper below. Looking at this within the 4-hour term time frame, still having a nice correctionary move within such. And amongst here, it's almost like one of those no surprises. So therefore, selling like 9% is about as much as I can do. I don't have the balls, quite, I can't say that, to make an aggressive sale, selling a third, half of what I own because of a very strong, what I would say, a setup. Everything that I'm selling at this stage because of where it is pretty much at profit because of buying down in here. But this is overextended among the daily term, of course, well above the 18 average of highs. To me, is in need of a price correction. We can see the 18 average of highs is also in at 21. 18 average of lows, which represents his previous level of resistance at about 18. And here we have 1700. So that's when I talk about deeper, that's deeper, or the next, where the other half would be. Okay. So then, amongst such, in here, it looks to me as if it's going to go down between 19 to 21 over the next 6 to 60 hours, or within the next 2 or 3 days. If this thing is able to hold this area, hold and stay above was 23. And then in time, whether it's this period or 7 to 12 periods from now, get above this 18 or this 18 average of highs, but more importantly, getting above this level of resistance, hold and stay above it, especially when you see support after a move at around, well, this upper area, that would show signs of a good setup. But breaking above here would tell me that from point A low to point B high, that its correctionary move looks like it might be over and we're ready for maybe point C higher or whatever, just another leg higher as that possibility. But as it plays now, to me, this is the early stages of showing weakness amongst this. If you see it maybe continue further and you see it significantly below a key area like that, that's waiting for more confirmation, and there's cost to that, meaning if you sell now, it's 23.35, and if you sell here, it's 22.41. So you're getting a better price point for this. And if you play any type of stop type of a game, It means in here, if you were to say bet against the price to go lower, that means noticeably above this high to me would be the area where I would consider stops, because if it does manage to get above here, that probably means it's going to go way up. And if you happen to say enter into this point in here, then you almost, to me, almost have to go in the same stop area, maybe previous high matching, but even then, I realize, for example, if I were to say short at 22.37, which I wouldn't and I can't. I guess the only way I can is technically by selling some to try to buy back later, which is what I've just done to a small degree, of course, like 9.5, 9.8% of my holdings. But if I were to do such, I just mentioned here, if I were to do it now and put, say, a stop at 24.60, I'm risking like 130 or 5%. Where in here, I'm doing the same stop number, but now I'm risking over 10%. Because if I were to see it go down here and then rally up to, say, previous high, I'm not convinced yet that the market is ready for a new leg higher. More times than not, though, if it does come down to this area and it's going to be starting a downtrend of some sort, then if it rallies, you're going to make a lower high in here. Thus, any type of support in this area becomes resistance, or a lower high, 61.8% from maybe the 24 and change to whatever this low happens to be. And then that's why if you put a stop up in here, I just don't like that part of the game. But what I'm saying is, this to me is just the obvious textbook setup for a play of such a degree, which is basically why I'm showing it. Let's move on next to Vertcoin, which I talked about this morning. Its volatility is large, to say the least. The must hold area to me is a large pierce below where it came from, which is this area here. Holding basically 7,300 area to me would be the general area. That's where the 18 average of lows would happen to come into play. But what has occurred yesterday was a significant rally, but it hasn't been able to hold and stay above the 18 average of highs. When we look at this on the 4-hour term, this was the most previous one before, so this was very good, almost as good as the previous one. Basically a 61.8% fib, 75% fib retracement. But for it to immediately do what it pretty much did in here, and that's to reject that rally quickly, it gives you a little less optimism that this is going to correctly correct this 18 average test in here. Looking at this via that of the hour, this is the pattern here, where you have this move, which was a small rally as we were talking about before. When it got going, it was a fast move up. And then after that fact, it comes down and it has this correctionary move within the 18. Markets can correct either that through price or through time. And considering it never even came close to the 18 until its eventual failed breakout, it was a time correction. And that's that next big thing, that failed breakout. After significant periods of just diddly-daddling, not doing much at all, it finally made an attempt to regain the upward market movement of a bull trend, and it failed immediately. So we take a look at this on, say, a 15-minute term time frame. We can see that more clearly. It made a little small statement at 16 and a half hours that it was looking to end the sideways movement. Came down to the 18, and then in here about the 17 and a half, and then how the following one at the 17 and 3/4 period was showing it's later breakout, and then it breaks out above it here, but it instantly fails, doesn't find support where it's supposed to if it's going to have the immediate comeback. You want to see it support this area of resistance. It had its opportunity on this, and instead it doesn't support the lows to follow throughs like this. So to me, this is most certainly looking as if this is, I think, going to go down further. If it does have any rallies, whether it be from now I would be looking at around 83 and a third, this previous level of support. Or if it even goes down further, say to 77 and change, then maybe rally up to the same level of 83 and whatever else on top of it, 83 change again, and then resist it. Wouldn't be a surprise either way. But it does look to me as if it's going to have a decent leg lower. So therefore, 18 average of lows, this little big area, huge test area. It's already had a hit of this support already, which I can see roughly here, which coincides with this level. So looking again at this, I will look at the 4 hour to see it. That original move in here. And if it finds support here, that would be in line maybe to possibly work within the daily. But if it doesn't, and we see weakness amongst such, even an okay leg in here below this level, then this tells me from everything from this point A low to point B high is in failure mode, because even though it might be hard to find an inverted head and shoulders pattern, the reason why it's so good is it's exact same sort of pattern in here. After all of this down move, it has the long sideways move basically from the end of November or US Thanksgiving until US Super Bowl, start of February. All of these resistance hits in here. This would be like the area of the right, the neckline of the head kind of deal, because it has to have a rally like this. Holding this little, this would be again the head and shoulders pattern of the head. So to me, it's a must area hold. So a little bit of a further decline going down to 71, 7,000. That is noticeably above 63 and the 65 lows from January. So holding the January lows to a higher high doesn't necessarily kill the pattern too much. While we're at it, let's take a look at this on the weekly term, because what we would see on this is from the highs, from basically the crypto top highs, consistent down moves in the entire year of 2018. There was a small attempt in getting above it within one period on July of such, but it started that week below the 18 lows. It got above it within that week, but it wasn't even able to close in the band, let alone above it or get above it further. But this is a spot where at least the band has been able to flatten out with the last little while. So if we see weakness on the 18 lows here, 68.28 is where its general area is at, then this is just enough of a failed breakout and time correction that if it breaks this support of around 6,000, that having a move to go to 432,000 area is not a surprise. But now that resistance has been established, getting above 11,000, and thus making these moves higher, whether it happens quickly, which is obviously the next little bit getting above these levels, or via that in time as we head into March and April, then I'm going to be looking for the opportunity for a decent leg higher, because I would expect resistance to come next, like 18, then 23-ish area, 25 to probably be really big, but we're talking about a 3x move as we stand now, looking at 25,000. Moving on next to AID. It's still doing the same. I mean, this is just flab. I'm at a loss for words to say about this as we stand. I haven't seen much of this, but wow. Next chart. Let's look at Bitcoin against Litecoin. I'm not going to go over the actual Bitcoin chart in this video. This is just mainly alts, and I really don't have much more to say after this. This will be the last one. This 0.01 handle, I think, is very, very large. It's barely went down from this move higher, so it's still well extended from the 18. But because it's barely went down, or there's at least one noticeable red candle move, I can see without looking at the short term, which I still will anyway, that even if it happens this period or the next, that it's been at least somewhat of a correctionary move, that when the price in here was at its high of the 0.13 handle, it was very overextended. If on this day, and this day is going to be now Tuesday, if it goes up to say 131 or 132, nowhere near overextended. because it'll be barely above this high within a correctionary move. But no matter what, it's going to be as it is anyway, that of overextended, because it's already still well above such. But now that we do look at this at the short term, see in here, support has been established well in here. It's trying, as we can see now, to lift off, but it's just a statement that it's attempting to do such. When after this final red candle down, I have these two types of close where they were before. First one down just a little bit, but not up. Then the previous one from now, barely having a line, the line up, barely having it high. So really a pause move. And now we can see that it's at its previous period's high. That when we look at this on the single hour time frame, there's that attempt. We can see in here that there's been several of these levels of resistance that it's barely breaking higher and higher. This 18 average has been in a declining mode since, of course, its breakdown at this 1900 hours from yesterday. Sideways correctionary move, but after leaving it, decent leg lower. And it's resisting this area where it came from, but it's already had, this is its fourth period within the 18 as it's now to the highs. I would rather it do it in such than just to have a fast move from well below the lows to then quickly to the highs, albeit that's fine for it to do such. But what this tells me is that this is something I want to take serious, that of the attempt, because it hasn't even gotten above the highs yet, but it does look to me as if it is ready to do so, especially when I shorten it out even further and look at such via the 15-minute time frame, because there we can see this is the third time it's barely made a higher high. Normally when that's the case, I call it matching highs, but when it consistently does it, I guess that's what I call it. I do like how it's held a little bit above the 18 in here. This thing to me is showing the potential that it's ready to get going. And yeah, I like the odds that as a day trader, just seeing this, if I'm to make some sort of proposition bet for, say, over the next hour for the price action to come up here, depending on the odds that I'm given, I wouldn't be surprised if within 4 periods, on the 15 that is, that it does such a thing. Because I realize that breaking above these, that they usually have fast moves higher, and its next move would be where it came from. And well, this area here is a conservative level for such, and its previous high in here, just its previous floor that it went to. So its support, its resistance, or its congestion area within the middle would be where I would consider it to go. I also do like within this pattern, within the last correctionary move, how it didn't find support within the 18 lows, meaning you have this, which had great, I mean, it held and stayed above this time here, but it barely went below. But in this, how it had a good size red candle breaking down below this low barely, where it already had a higher low. I would have basically been saying, where do I want to find support as it was falling down here? I would have said about 1177, which would have been noticeably higher than this. Instead, it was noticeably lower. But for it to quickly rebound and have 1, 2, 3, 4, 5 green candles like this in a row, and now the last two just doing as we're seeing in here, that tells me, it's almost screaming to me that it's ready for a decent leg higher. I wouldn't be surprised before it does it, or I don't know if it would just quickly go up now, meaning the bottom is in for the short term, or the bottom is nowhere below like the area of like 118 something, meaning the 18 average of highs is where the lowest it would go to. Maybe it comes down in here, but I wouldn't be surprised either way, that either of those two situations, that it just has that quick move going higher. Or another way of putting it, if I were to make any type of wager and I want to put stop losses, I would be extremely surprised again if it breaks decently below this, and thus maybe an area like here. But when you talk about stops, how many people are a case of that for this move? Meaning they're buying on a breakout in here, Oh, it's breaking out. Okay, let's put a stop below this previous low at about 11706. How do you feel there? So just show part of the risk rewards, or part of the situations that what a stop can actually do as well. Thank you for tuning in, and have yourself a great day. Bye bye.